Well, first, a couple of points from today's national accounts. This chart compares GDP growth for the third quarter among various countries. And we're the last to come in, by the way. Australia's 1% straddles the West and the East, the developed and the developing world. The United States economy grew 0.5%, as did Germany, UK and France, although the Eurozone as a whole was dragged down by Greece, Italy and Spain. While Japan and India grew by 1.5% and China by nearly 2.5%. And second, retail sales are flat, but total spending is strong because of spending on services such as health, education and travel. Also, it's worth mentioning that retail sales don't include what is bought online from overseas, and imports don't include that either because most items are below the $1,000 limit. It's the large and growing black hole in the national statistics. The Australian dollar lost 0.5 cent yesterday when the interest rate was cut, and it got back 0.5 cent today when the GDP number was bigger than expected, on the basis that it's less likely there'll be another rate cut. Actually, it entirely depends on Europe anyway. The share market went up 0.7%, and investors liked the fact that Bank of Queensland was first to cut its mortgage rates yesterday. Its shares went up 2.5%, while the Big Four went up about 1%. Telstra is sitting on a 14-month high of 3.25, and Woolworths added nearly 2%. Around the world, and the markets in Europe and US barely moved either way. Investors everywhere are in a state of suspense over what's going to happen in Europe this week. And Japan was the best of a rising lot in Asia. And that's finance.